Nifty trades flat around 22,000, slips from opening highs. Meanwhile, the Sensex trades above 72,300, up over 200 points. All sectors in the green except for tech and autos. IT is the top sectoral loser. Realty's gains, top sector gains at 2%. And Paytm continues to gain, hits upper circuit for the second straight day. The stock trades with a gain of 10%. And shares of Britannia fall over 1% as regional players give tough competition eat into its business. Profits dip 40%. Chanda Koch's arrest by CBI illegal, rules the Bombay High Court, upholds earlier interim bail. Those are the top headlines that we are tracking at 10:30 a.m. This is Samina Nalwala, and you're watching the F&O Show, where we take you through all the derivative action. Well, a quick check of how the street is doing. After a beautiful rally yesterday, the markets are trading flat around 22,000 on the index. The breadth of the market's not too bad, with the bias on the upside, but interestingly, it's Bank Nifty that's actually performing in today's day of trade, while IT stocks seeing profit-taking after a nearly 3% rally in trade yesterday. Well, your top gainer on the exchanges today is SBI with a gain of 3%. HDFC Life Insurance also doing quite well, up 3.5%. Tata Steel, Adani Enterprise, the Bajaj Twins, Reliance Industries, JSW Steel are some of the other gainers. On the losing side, Infi takes a break, down about 1.5%. Britannia, after a gap up of nearly 2.5%, sees selling pressure down over 1%. ICICI Bank, Wipro, Power Grid are some of the other losers. Across the broader markets, that's where all the action seems to be focused on with regard to earnings. You've got stocks like EIH that trade with a gain of 20%. We will talk about that in a minute, but just first over to Agam for all the F&O action. Agam, Nifty is trading flat, but I don't think anyone's complaining after a sharp rally yesterday. In fact, a consolidated, broad-based run-up yesterday. The Nifty is taking a break at 22,000 this morning.
Yes, Samina. And, you know, until yesterday, we also saw a considerable amount of writing around the calls when it comes to the 22,000 mark. And a lot of those calls have been unwound. And it also means that 22,000 now becomes a little bit of a pivot and perhaps a level around which we can expect the Nifty to consolidate. Well, we are looking at a 0.3% up move there and about a 1.5% increase in open interest as far as the Nifty futures go. And the Bank Nifty, of course, which will be in focus perhaps because of the weekly options expiry. The futures, of course, are advancing by around 0.4%. And in terms of your open interest, we're seeing further unwinding coming through. Let's talk about how things are panning out as far as the options market goes. And as I was suggesting, 22,000 is where we are seeing the most amount of increase in as far as calls as well as puts are concerned as far as the Nifty goes. And moving on, well, this is, of course, your change in open interest. Now, a lot of that traction will moved higher to around 22,000 marks. So you do see a most amount of activity in that 22,000 call strike. Moving on, the Bank Nifty, of course, remains in focus. As I was mentioning, 46,000 at the moment continues to be a place where we're going to see a lot of activity. And 46,000 will also be that cornerstone around which you see the Nifty, the Bank Nifty move around. But as far as stocks go, let's pull that list up as well. And we are seeing shorts in Navin Fluorine, Berger Paints and IEX. IOC and Max Financial, on the other hand, looking at longs building in. And in terms of stocks which are seeing unwinding in open interest, you're seeing about a short covering for Chamal Fertilizers, HDFC Life and Lupin. Of course, the life insurance companies are in focus today as they're advancing. Let's keep an eye on that. And of course, the Bank Nifty today, Samina.
Indeed, it's doing a little bit of a catch-up this morning with regard to Bank Nifty. In terms of stocks, well, Agam highlighted the ones that are seeing F&O activity. There are others as well that are seeing interest in trade. You've got EIH that's up 18% on earnings. You've got 197 Communication that's up 10%, and that's Paytm we're talking about. WeMart on earnings is doing well. GB Chemicals is having a pleasant day. Angel One on back of customer additions of 10% in the month of Jan is seeing a substantial rally. On the sell side, Navin Marine, Fluorine, like Agam maintained, EID Perry, Reddington are seeing some pressure in today's session. Endurance Tech as well, disappointing numbers, down 2%. And Sirma also seeing a cut of 12.5% on back of earnings. But it is Paytm that the market's still seeming to be getting excited about. The stock is up 10%, hitting upper circuit. Harsh is joining us with the fine print. Harsh, over to you. What's going on?
Well, yes, absolutely, Samina. Of course, good recovery. It's a bit of a cheer with regard to where Paytm investors are seeing the kind of recovery on Paytm. Market cap has come back above the 30,000 crore mark. It's at 31,000 crore. Just to add some more perspective, you have cash balances in Paytm as well as the asset base of Paytm, and I've tried to pull out as of September of 2023 where the cash balance stood. Around 4,500 crore is where that cash balance stood, mind you, against a market cap of 31,000 odd crore. So almost 15% odd of that market cap is pure cash balances. Also, it has certain investments as well as receivables of around 3,500 crore. So something around 7,500 to 8,000 crore of all of these receivables plus cash balances for a market cap of roughly 31,000 crores. So that's possibly one positive that one needs to look out for. The other piece, of course, is all the commentary that's come through. They seem confident that they're going to migrate accounts to another bank. Of course, how, when, where, still awaited. Tons of uncertainty. But with that, I also want to go across and break down how analysts are rating the stock. We have most analysts, or rather 40% of the analysts, have a buy rating on the counter. The target price average for the next 12 months is 740 rupees, a 50% upside even from here, as per analysts, of course. And we have 27 holds, 33% which have a sell rating. Now, within the sell rating as well, very interesting trend playing out. Only one analyst has a sell at 450. Outside of that, all of which have ascribed a target price of 500 plus on the share. So that's how we can round it up. But nonetheless, the commentary that seems to be coming from the analyst community is there's plenty of uncertainty even now.
Right, that's the Paytm story. And our brokerages think about the counter, the stock trading at 490 off the day's high points. The circuit has opened up, but still trading with a gain of nearly 9%. We're now joined by Ashish Kyal, founder and CEO of Wave Strategy Advisors, and also Jay Patel, Research Head InvestMentor Securities. Hi, gentlemen. Thanks for joining us. Jay, I'll start with you first. Yesterday was quite a beautiful up move. It was a broad-based rally. The markets closed pretty much at the day's point. Barring banks, I think every other sector participated in trade. This morning, we've opened at highs, but we're off that point, around 22,000 on the Nifty. What is the trade? Would you go long for the Feb series?
So good morning, Samina. I would look at 22,040 levels to sustain for like 1.5 hours. After that, we can see a good a long build-up coming in. Particularly, I am bullish about market Nifty, but I will suggest 21,150 levels to be taken out if 22,040 levels sustain. So currently, if we see at the market, PSU banks are holding out, giving good support. IT sector is giving good support. Particularly, I would say pharma sector is a good defensive sector, but at this point of juncture, since Bank Nifty and particularly one segment of Bank Nifty, private banks are less supportive, I would see today's closing particularly is very important for Nifty. The opening was 22,000, above 22,000. That was a good point, but we didn't sustain that level. And 22,001 crore call writers position are already accumulated at 22,000 levels. So 22,000 would be a crucial point. Once we sustain above that level, we can see new all-time highs coming in Nifty index, and particularly Bank Nifty. I would currently avoid Bank Nifty for buying or for even shorting. So since it's in a range-bound trade, I would wait for Bank Nifty to rebound above 46,400 zones, and then I will go long on Bank Nifty. But for Nifty, I would go long after it crosses above 22,040 levels onto intraday's perspective.
Well, you can see Bank Nifty for now weakening further as we speak. Over the last 5 minutes, it has dipped quite a bit. But Ashish, good morning to you as well. How are you addressing the benchmarks at the moment?
Good morning to you and all the viewers. See, if you look at overall trend of Nifty and Bank Nifty, there has been some kind of a divergence that we can clearly see. Bank Nifty has been an underperformer over quite some time, and Nifty has managed to move upside. But having said that, Nifty is also failing to sustain about that 22,000 mark. Every time it goes towards the near to the lifetime highs, we can see some kind of a selling kicking in. So I think if it's going to be a range bound market, on the upside, today's high around 22,050 is going to be an important hurdle. And on the downside, the index has a very important support, which is going to be around 21,850. So that is the broad range within which the market is stuck. And breakout of this range is required for movement in that specific direction. As far as Bank Nifty is concerned, I think Bank Nifty has a very important hurdle, which is going to be around 46,200. So if Bank Nifty does not move beyond 46,200, I think we can start seeing again some kind of a selling pressure, and the index can move lower towards the level of 45,500. So if I have to short, I would be looking for Bank Nifty as a shorting opportunity. And if I have to play a range, maybe if you look at the options data also for Nifty, you can see equal amount of build up on either side of 22,000 of call and puts. That shows short straddle is possibly in play, and there is no strong conviction by big players either. So I would be playing a range bound trade on Nifty and maybe a shorting trade on Bank Nifty.
What would you do, Jay, with IT today after a nearly 3% rally yesterday? Some of the stocks are seeing profit taking. Now, is this a good opportune moment if one is considering going long on IT? And if yes, would it be the index or specific stocks?
So, Samina, if we look at Nifty IT's daily chart, particularly we see a rounding bottom pattern finishing up in yesterday's trade, and particularly today we can see that it's taking support at around that level, 37,900 around level. So I would suggest we can see a good leg of up move again in IT sector, particularly if we see tomorrow's yesterday's particularly session, TCS and all this. The stocks which have seen a good up move rally, particularly after 1 or 2 years. So we can definitely see a profit booking from particularly retail investors and as well as from DI side. So I would go long on Nifty IT, wait for a little dip coming in this index, particularly 37,600 zones. I would be a buyer at that level, and Nifty IT could be something which you can look out for in coming quarters. So Nifty IT, as well as if we focus on TCS as well as on mid-cap IT companies like Coforge, I would see a good buying opportunity coming in these stocks, and TCS would be a good long-term buying opportunity currently at these levels. I would see TCS hits 4,600 zones. We can see a good bonus or something coming up in this stock. So I would focus if there is something corporate action coming in after stock crosses about that level. So let's see what happens. But IT, I am very bullish about.
Right, bullish on IT. Bearish on Bank Nifty. We'll take a quick break. We'll come back, continue talking to our guests and take you through all the action in the markets this morning.
Welcome back. This is the F&O Show, and we now shift focus to all the trading ideas that our experts have for us. Ashish, I come to you. What are you recommending today?
The first stock on the buy side is going to be Kenfin Homes. We can clearly see a very strong bullish candle formation here. The volumes are picking up and the stock is breaking out after forming the double top earlier. So I think there is a positive breakout that we can see on the stock here. And one can create long positions for the target of 910 and maintain a stop loss of 815 on the downside. And the next stock pick is going to be AB Capital. After a good enough consolidation, we are seeing a strong bounce back on the stock. It's possibly starting the third wave on the upside, which can be strong and fast. And long positions can be created in AB Capital for the target of 200, maintaining a stop loss of 180 levels.
Jay, what about you? What are your top trades this morning?
So coincidentally, I have also a long position on Kenfin Home, particularly at current levels. If we see the stock has given a strong breakout above 840 zones, and particularly the rounding bottom pattern has been finishing up, and we can see a good up move, particularly from this level. Above 896 would be a target, and 828 would be a stop loss. I can RSI is seeing a strong positive divergence, and we can see MACD displaying a good momentum, particularly on current chart. And after the budget, we can see a good buying coming in, particularly home financing companies, LIC Housing Finance or Kenfin Home. So Kenfin Home would be a buy at current levels. The target would be 896 and stop loss would be 828. The second stock would be Adani Enterprise. Adani Enterprise today displayed a strong buying momentum, and particularly at current levels, we can see a breakout on a daily chart at this level, and particularly on a weekly chart also, we can see strong accumulation zone, and stock is climbing above this accumulation zone. So 3242 would be a buying price, and first I can see the stock climbing towards 3460 levels. The stop loss, however, we can keep at 3194 zones. The volume we can see today is building up strongly, and particularly we can see long build up in Adani Enterprise stock. So I would be a buyer at Adani Enterprise and Kenfin.
Okay, well, let's talk about a handful of companies that we want to talk about. Well, the life insurance companies are buzzing in trade today. In fact, one of them is the top gainer on the Nifty, that's HDFC Life. But behind it, we have some gains coming in as far as SBI Life is concerned as well. Of course, LIC is not doing as well in today's day of trade, but SBI Life and HDFC Life are advancing in trade. Ashish, can you come in on HDFC Life? We haven't seen too much traction here in general. Do you think there is any trade at all in this particular counter at the moment? Any levels that you're watching out for, or would you absolutely avoid?
See, if you look at HDFC Life and SBI Life, I think SBI Life is trading near the 52x high, but HDFC Life has shown decent amount of down move and is now showing kind of a retracement. So I would be bullish here because the stock might have completed the correction on the downside. And if it manages to sustain above the level of 615, I think the stock is headed towards the next price action area of 640. So the overall trend for HDFC Life might reverse. We can expect a move towards 640 provided it crosses 615. And on the downside, the support for the stock is going to be near today's low, which is 596. So as long as stock manages to sustain that 596 levels, I think there is a possibility of playing for that pullback towards 640.
Right. That is a few of the picks coming in from our guest. In the meantime, there are a few others that the market is drawing attention from. A whole bunch of auto counters are having a pretty good day. You've also got real estate that is in a sweet spot. Jay, if I had to ask you anything in the real estate or auto pack that has caught your attention today?
So on a realty space, I would say DLF is something is very interesting, particularly after the stock has crossed its multi-year highs from 2014. The stock has bounced back and it is currently in doubling zone. And I would say the stock can climb above four-figure in a very short period of time, because we can see strong spurts coming in realty space, and particularly the realty stocks like Shobha. Even if we talk about Shobha and DLF, I would be a buyer at current level also for mid to short term. And Shobha displayed a strong rounding bottom, finishing with heavy volumes on a chart in yesterday's session. And particularly at current levels, I would say on Shobha, we can see 1720 levels coming in very short period of time. So Shobha and DLF would be on realty space. And on auto space, I would be a buyer for Tata Motors. Tata Motors displayed a strong results particularly, and after the result we can see the stock has climbed upwards towards 900 zones, and in a short period of time we can see strong demand coming in this stock, and we can see the EV play, particularly after the FAME 3 rules kicking in after the budget. We can see EV demand to be increased, and we can expect the stock to climb upwards toward 1060 levels for Tata Motors, as well as Maruti is also currently trading near its all-time highs. So Maruti would be something very interesting, particularly passenger vehicles. It's all-time high sales, and we can expect the stock to cross above 11,000, and once it crosses above that levels, we can see the stock climbing upwards toward 13,000 zones. So I would be a buyer for the large cap space on Tata Motors and Maruti.
Right. Jay, thanks so much for that. In fact, we're out of time, so I'm going to thank both our experts, Jay as well as Ashish, for joining us and taking us through their views on the markets and giving us trading ideas. But we shift focus to JK Tyre, where we spoke to the management on the back of their December quarter earnings. This is what they had to say. Listen in.
We have been working continuously on our efforts on premiumization, wherein we focus to sell more of the premium products, the SKUs in which we are able to deliver better value to our customers, whether it is in the TBR segment or also in the passenger car radial segment. That is one area that we have been able to make good progress. The other is that the overall product mix has become favorable for us. When I say that, what I mean is that in our Banmore tire plant, we had taken a capacity expansion program to make more of the passenger car radial tires. That expansion program has started giving results. Almost 80% of the program is commissioned, and we have started getting the increased output from that plant. And therefore, we are able to improve our product mix towards more of the PCR segment, which is definitely a more profitable segment for us. Within that also, we are trying to sell more of the premium, the high rim size SKUs, which are the 16-inch and above. There again, we have been able to make some decent progress. As I speak, maybe in Q4, we will see more of it happening in the Banmore plant and even in our Chennai plant, which are more focused towards producing the passenger line radials. Having said that, even in our TBR segment, we have been working on certain power SKUs, which are the fuel saver, which definitely give much better value to our customers, and thereby it also helps us command a premium on those SKUs in the marketplace. We are working on extra mileage. One thing which we have seen is that many of our customers are looking for tires which are more suited for the applications that they are in, rather than just taking some generic tires. Even when it comes to the buses, a lot of tubeless radials are being seen. The demand for that is going up. On EV buses, we have been able to provide state-of-the-art products. The product that we have recently introduced, the JUX-E, is specifically designed, engineered, developed, and validated for application on the EV buses. These buses require tires which are low on rolling resistance, low on noise, and at the same time are able to provide all the performance parameters, including durability. As we know that the EV buses have a high starting torque. So these also are suited for such applications. So overall, our efforts are in the direction of making products which are differentiated in performance and deliver better value, and thereby we are able to command a certain premium. This actually helps us, keeps us in good stead towards kind of meeting some of the pressures which come either from the cost side or even from the market side when it comes to the pricing of the regular SKUs.
Okay. And as we wrap the show, let's listen in to SBI's Dinesh Khara as to what he has to say about expectations from the upcoming monetary policy. Listen in.
I think perhaps I'm not expecting any kind of a change in stance or the direction as of now, but maybe they will. MPC would have even much more data, which I'm not privy to, so I'll not be in a position to really comment much on that. But my overall sense is that perhaps it is likely to be the tone and also the direction should be what it was in the last policy.
Hello and welcome. You're watching NDTV Profit and you're tuned in to the Small and Mid Cap Show. I am Hiral Dadia and with me is Harsh Saita. Good morning, Harsh. Clearly, if you see from a market's perspective, we're trying to again inch towards that 22,000 mark pretty closely, 0.2% higher. And if you see the advanced decline ratio,
pretty much 50-50, no major upticks coming in there. You have the life insurance companies which are seeing some smart moves. So HDFC Life and SBI Life which are up in trade. SBI is up in trade. Financials we're talking about as well, and that's mainly ahead of the RBI policy tomorrow. Britannia on the back of earnings is up 1.9%. They've taken around 2 to 3% price cuts, and rural demand seems to be a concern so far. Hindalco, Coal India, two other names which are seeing smart moves. Infosys trading under pressure.